Hi, good afternoon, everybody, and thank you very much for joining our webinar this afternoon. I appreciate, certainly in Dublin, it's a beautiful day, so appreciate you stepping in out of the sun to join us. This webinar will be recorded, so if you'd like to listen to it again or indeed share it with colleagues, you're very welcome to do so. We will send on a link to the webinar afterwards. And if you'd like to also join us later on in the autumn, we will be having further updates, which we will send out the invites for as part of that follow-up to you. It's an interesting time to be a company director, I know, from speaking to many of you over the last weeks and months. And we continue to see daily pressure on boards as they try to articulate and understand the challenges that are being faced because of many of the areas, from Brexit to COVID to approaching year end in a very different scenario, as well as the board trying to articulate a clear vision of the organization's contribution to wider society. And there is that very much push from investors and all stakeholders to have a clear explanation that the development of the strategy is ongoing, that good mitigations are in place in relation to some of the risks that have materialized over the last number of months, and that these considerations, opportunities and risks are being looked at by the board in a wide perspective. I'm joined today by Oliver Holt and Tracy Gordon, who are going to bring us through some of the detail in relation to some of these areas. And I think while all of these obligations aren't relevant to every organization and company, they certainly provide an excellent principle and context in relation to you as board and audit committee members to think through in relation to the topics that need to be addressed as many of you head towards year end. As I say, we will have further topics in the autumn, and if you'd like to provide us with any information about areas that you believe will be useful to hear about, please feel free to email me or any of my colleagues. With that, I'll hand you over to Tracy, and I will catch up with you at the end of the presentation.
Great, thank you. Yeah, good afternoon, everybody. So in my session, I'm going to be covering, as it says on the slide, governance and regulatory hot topics for audit committees. I'm going to cover 3 areas. So firstly, a bit about corporate reporting, so the front half of the annual report type reporting, and I think Oliver will be covering the accounting side later on. I will also then look at these the kind of current focus on ESG and climate reporting, and then I'll just wrap up with a little bit of an update on the UK's audit reform sort of process and where we've got to with that, just so that you're aware of the latest status. So if we could just go to the first section, please, on FRC and corporate reporting. And the first thing I wanted to talk about, just on the next slide, please, is yes, this, we all know that we're in a time of huge uncertainty, and that, as you come to the year end, it's going to be a very difficult time to be able to explain the story of your business throughout the year and how it's looking into the future. And over the summer, the Financial Reporting Council's Financial Reporting Lab did some work working with preparers and investors in relation to, what disclosures would investors like to see at this time of huge uncertainty. And this infographic was kind of the output of that, and it's useful to, when you are thinking about your reporting and the shape of your reporting for the front half for this coming year end, to really think about these kind of 5 key areas that they're really keen for companies to be able to explain when they are trying to present that story of the year and the future. So the first piece there under the heading resources, can the company articulate and be very clear on exactly the cash position, the actual liquidity position, and what cash and liquidity resources are available to the company in the short term. So really trying to be very clear on that piece, and then moving through into what actions can management and the board take in order to secure perhaps additional liquidity in the short term and to manage that expenditure, and just really trying to set out the options that are available in a realistic sort of term to the organisation. And then finally, they want to see, looking to the future, what steps are management and the board taking to really protect the key parts of the business model and those key assets and value drivers. So I think just hopefully something that's quite useful just to think about in terms of setting out that story of the liquidity position and the available options to the company in order to sort of demonstrate the ongoing sustainability of the business model and the liquidity that's needed to support that. And just on the next slide, just to make you aware of a couple of other lab reports that there's a lot of the work the lab does is really trying to help identify practice and to really make clear what it is that the investors who ultimately you're writing your annual report for want to see. And just to highlight, there's two projects that the lab has ongoing, which we'll report at various times that may or may not be helpful for the 2020 reporting season. But firstly, they're looking at reporting on stakeholders, and for the UK market, those companies that have been reporting on Section 172 of the UK Companies Act. That they hope to be able to give some a short piece around the Section 172 disclosures before the end of the year, with a more detailed report on state reporting to come in 2021, so something to look out for. And then also, similar to the work they did on the infographic that I just shared with you, they're also doing some more detailed work on general reporting on risks, uncertainties, and various scenarios. So that's a more involved project. I'm told that won't report until mid to late 2021. But again, if they come up with any useful findings that they think could be helpful for the 2020 reporting season, they will provide that. So again, something to look out for. And if it is something that your organisation would be interested in participating in, if you've got an interesting story to share, then I've put the email address there for the financial report. They're very keen to hear from companies. Okay, if we could just move to the next slide, thank you. So just a couple of other areas just to make you aware of, coming back sort of on the stakeholder reporting and the focus on stakeholders. On the left-hand side, just to raise your awareness of a statement made as part of BlackRock's investment stewardship report, that they're really highlighting that that they do believe that companies should be very much looking after their employees and their other stakeholders as we go through this very difficult time through the response to the pandemic. But also, and this is the kind of last quote, is thinking very carefully about your decisions about both compensation for the executive and the board, and also allocation of capital, particularly when companies have been receiving government financial support. That they know that difficult choices will have had to be made, but they do want to see that those key stakeholders have been considered and where appropriate, well looked after. And then on the right hand side, I just wanted to make you aware of some movement from the European Commission around a new legislation that they're looking to introduce, which will kind of try to level set in terms of the kind of codes of practice around human rights and environmental practices. So really trying to set a standard for the due diligence that companies are required to do around the disclosures and the commitments that are being made in that area. So just trying to level set a bit. And you can see on this slide the companies which have signed up to that initiative. Okay, and on the next slide, I just wanted to move on to thinking about, for those companies within your organisations that are either a large UK registered company or are reporting under the UK governance code, you will be needing to report on those Section 172 factors. And clearly, during the COVID response, there's been a lot of decisions you've been having to make that will have affected a number of the factors on or from Section 172. So I think just really important that you are able to articulate and explain how those decisions were reached, through the lens of those Section 172 factors. So really trying to bring to life for your shareholders and the readers of your financial statements and annual report. And on the right, I just also wanted to highlight, and I'll come on to this a bit more later, around the Bryden review, and he actually made a recommendation which will perhaps be consulted on towards the end of this year, around the introduction of something that goes a bit further than Section 172, to really think about a public interest statement as well. So thinking about how do boards and companies think about their public interest responsibilities and the actions that they're taking to discharge those. So I think that's just something to bear in mind, is whether you want to go a little bit further than Section 172, even though there's no requirement to it at the moment. But it just seems, in the general environment and thinking about your response to COVID, this could be a good time to explain that wider interest role the business has. So that was all on the corporate reporting specifically, but I think moving on to ESG and climate, it's all very much related. If we could just move on to the next section, please. And then my first slide in there, please. So this is just really a bit of a sort of, hopefully grabs your attention and shows you that, you know, the scale of what we're facing. So yes, COVID seems like a huge uphill battle to respond to, and yes, it will be the looming economic situation afterwards, but this is trying to demonstrate the scale of climate change that we all have to tackle now, even if you're the most skeptical person in relation to the impact of climate change. I think we're just trying to show that this is something that needs dealing with right now. And in the UK, on the next slide, please, just wanted to make you aware of a consultation that is currently underway. So this would be a new listing rule that would actually ask all premium listed companies on the London market to, you know, to state whether they have provided the disclosures recommended by the Task Force on Climate-related Financial Disclosures, and where you have provided them, and if you haven't, then why not? So that's going to be a new listing rule, and potentially a new listing rule for periods beginning on or after the 1st of January 2021. And just so you're aware, if you're not familiar with the TCFD framework, on the right-hand side of this slide, I've tried to set out exactly, you know, the 4 key areas of those disclosures. So they want boards to talk about the governance around climate-related risks and opportunities. They want to understand how the impact of climate change has been embedded within strategy and strategic decisions. They want to know how the risks are being managed, and they also want to know about key metrics and targets, how those are being addressed, you know, and how those are being used within the business to really manage the risks and opportunities within the business. So that's something to be aware of. If you want to contribute to that consultation, it is open for another week or so, and that's from the UK Financial Conduct Authority. So just on to the next slide, please. So another area that you want to be aware of is the non-financial reporting directive has been around for a number of years now, and all public interest entities with more than 500 employees have been having to provide these disclosures around these 5 matters that you can see here on this slide. You know, to describe the policies around those matters, the due diligence processes that the board uses to check the effectiveness of those policies, the outcomes of those policies, and any useful risks. So earlier this year, the European Commission decided to do a review of practice in this area. And essentially, you can see on the boxes, the 4 boxes on the bottom of this slide that they published in July, that the responses to that work is that there is some concern from the users of this information around the comparability, the reliability, and the relevance of the information that has been provided. And part of, you know, reason given for those issues is that there is a lack of a common standard for the provision of this information. And so what the European Commission have seen is a very strong support for some form of common standard, and I'll come on to that in a moment. They've also seen strong support for stricter audit requirements in this area, and also strong support for potentially an expanded scope of the non-financial reporting requirements to potentially other categories of company beyond public interest entities, to actually large unlisted companies as well. But that's all something that we'll see kind of unfurl in the rest of this year and perhaps early into 2021. So just on that, the common standards point, just to make you aware on the next slide, if that's okay, we have seen the start of some moves towards common standards. Now on this slide, you can see this is a report that was issued by the World Economic Forum and the International Business Council at the start of this year. This was their contribution to this debate around, is it possible to have a set of common metrics for ESG reporting? They have set their report out across 4 pillars that you can see here on this slide. So principles of governance, planet, people, and prosperity. They issued it as a consultation draft at the start of this year, and over the summer they've been doing quite a lot of outreach to try and refine those metrics and to get some more buy-in from the kind of relevant stakeholders such as investors and preparers. And so I think in the next week or so we expect to see the publication of the refined metrics, as they're referring to them, as kind of the next stage of this debate. But then also on the next slide, I just want to make you aware that another piece of this debate we saw just last week, an announcement from the 5 largest standard setter organizations, where they have decided to come together and issue this commitment to working towards, again, a sort of common set of generally accepted principles of reporting, similar in sort of level of acceptance as GAAP and the accounting standards, just to really try and drive forward on this ability for companies to produce information and only have to produce it once, so that that information is then fit for purpose across all the various users that might need it. So that is their aim, and I hope that we will see some further movement on this going forward, because we know it's a big area that you as companies are getting a huge amount of requests for information on, and hopefully projects such as these and initiatives such as these will only help to sort of harmonise those requirements and make life a little bit easier. Okay, and then just finally from me, I'm just going to move on to my final section, just on the audit market reform agenda in the UK. And so just on the next slide, you may have heard through the media and so on, there's been 3 major reviews that have been undertaken over the last couple of years, really. So we had Sir John Kingman looking at the role of the UK's Financial Reporting Council. We had the UK Competition and Market Authority looking at statutory audit services and the market for that. And then most recently, we had Sir Donald Brydon actually looking at the quality and effectiveness of audit. Now, all those different reviews have reported into the UK Department for Business. They are sitting on probably close on to 200 different recommendations, and I've tried to summarise some of those on here. Some of the headline ones will be that actually our Financial Reporting Council is going to be scrapped and replaced by probably a much more intrusive and hard-hitting regulator called the Audit, Reporting and Governance Authority. They're going to be able to seek to have powers to hold directors much more to account, and they're looking to be much more proactive in their kind of support and review of the capital markets and the companies within that, to try and get in there earlier in relation to any issues that companies are having. The CMA review came up with recommendations around things like introducing mandatory joint audit, potentially market share caps on the Big Four, and also potentially operational split of the Big Four between. This is looking to separate out between advisory and non-advisory services. And then Brydon was really looking at introducing a completely new purpose and definition of audit, a new profession for audit, so a dedicated audit professional qualification, and then lots of other areas around enhanced reporting by boards around things like their key performance indicators, their alternative performance measures, and really looking at the assurance that is needed over areas such as that. And then I mentioned already the public interest statement, and also something called the resilience statement, which would really take going concern and viability reporting to a new level, trying to be very, very clear about what is being done around the the resilience of this business. So I've skipped over the internal controls piece there, because on my next slide, I just wanted to highlight another of the recommendations which came through both Kingman and Bryden, was that we really in the UK needed to beef up our framework on internal controls, because at the moment under the UK code, all the board has to do is confirm that they have done a review of effectiveness. There is no need to actually confirm what the output of that was, or that the controls are effective. As some of you will be aware, there is a requirement to do so in the US. So I think it's fairly likely now that we will see a move in the UK to move towards a stricter regime, where Bryden did recommend that actually it would be the CEO and the CFO would do a joint attestation to the board in confirming the effectiveness of internal controls, and then it would be for the board to then present to the shareholders in the annual report that they had received that attestation. So this is all something that's kind of in the boiling pot at the moment in the UK. We are expecting further steps on this later this year, and we'll see what direction the government is minded to take. But there has been some various suggestions as to the approach that would be appropriate. But on my final slide, I just really wanted to highlight, for those of you that are on audit committees and having to take responsibility for oversight of internal control, these are the areas that we really think are as it says there, the attributes of a robust financial control compliance framework. Yeah, because I should have made very clear that the attestation that Bryden is speaking about is in relation to the controls over financial reporting only. So this is a kind of ring fencing that they decided to do as being kind of a more practical step, rather than going for all the effectiveness of all controls at this stage. But really, when we're thinking about what you as boards should seek to see and to challenge management in relation to your internal controls, it's, can you see that there's really well communicated hierarchy of delegated authorities from the board? Is there, can you see documentation of the entity level controls? Has there been, when was the last financial and fraud risk assessment undertaken? How good is the process documentation? It's really trying to push hard, I suppose, on what it is you're seeing. Are you really comfortable? How much work would your organisation need to do to meet any formal attestation being required going forward? So I will stop there. It's just something to be aware of, something to think about, and some questions to ask your management teams in relation to internal controls, because I think this should be a big area of focus for everyone. And I think in the UK it is because of the corporate failures that we've seen. When you unpick them, there has been issues around, in some cases, some really basic internal controls over financial reporting. So I will stop there. We can take questions later, I think. Shall I hand over to Oliver?
Thanks very much, Tracy. If we move on then to the next slide, you'll see the various different areas that I'll cover with you this afternoon. You'll be grateful to hear that in terms of new accounting standards, there isn't an awful lot to report. As you may recall, we have a new definition of materiality, which isn't really changing the actual number you'll come up with. There's a new definition of business for those of you who are acquisitive, and you may need to look at that, and those particularly in the financial services and interest benchmark reform does have implications for the application of IFRS 9, in particular in hedge accounting, but also in other areas, and there is new accounting to help ease the transition between the benchmarks. So that's all very welcome stuff. I suppose in terms of accounting standards, the one other thing for the audit committee in particular to think about is the actual application of IFRS 16. Last year, for most reporters, it was mandatory for the very first time, and it's quite a complex standard with a lot of judgments required. And of course, then the question for the audit committee is how well embedded are all those judgments and other areas of the rule book that makes up IFRS 16 in the finance organisation, and how robust are the internal controls coming with that. And as Tracy has just mentioned, there is much greater scrutiny now in relation to the formality around those controls, and what you might reasonably look for. IFRS 16 certainly it's a trend, I suppose, out there that those who bought various software packages to help them implement IFRS 16 are now finding the limitation of those packages, and therefore those workarounds are all something that are worth looking at to make sure that there isn't anything material that the audit committee needs to be thinking on. Now, over and above that, each audit committee is unique and will have its own unique business and things to think about. But of course, there are three huge behemoths of matters out there that nobody can escape: COVID-19, Brexit, and climate. And we'll take a very quick, brief look at some of the accounting implications of those in the time allotted. I also want to just mention this thing that I have on the slide as ESEF, the European Single Electronic Format, because that's something new and worthwhile checking in with management that they're ready for it. And also just to draw your attention to where the ISB are thinking about in terms of reporting performance and what the future income statement might look like. Because along with the investor relations people, the finance team do need to start thinking about what way is the best way for the organisation to be putting its foot forward when this new proposals from the ISB start taking shape. So moving on then, let's take a quick look at the COVID-19 area. Now Tracy mentioned the lab earlier, and they have been very busy over the summer. Another report that they produced is the one that you can see on the left-hand side of your slide there. And just to let you know, I believe you're getting the deck after this presentation, and each of these pictures, if you click on them when you have the deck, should hyperlink you to the actual document itself so that you can find it easily. And I certainly would recommend having a look at this particular publication where the lab looked at best practice for going concern, risk and viability reporting. And going concern, of course, is an area that is undergoing quite a lot of scrutiny for a number of companies, because with COVID, it's practically impossible to try and figure out what's the upturn going to look like, when is this pandemic going to end, how fast is the bounce back, and what great depth, if any, will there be to the bounce back, and so forth. So there's a huge need for the audit committee to take a look at what management are doing, make sure that there's no management bias in that, and to see how they're actually explaining the story. And we're certainly seeing various different trends going on in boardrooms. One in particular is a challenge from the audit committee to management's downside in terms of looking at the going concern and projecting out cash flows, and in particular having a reasonably plausible yet severe downside, if you like, look at going concern, looking then at the headroom there is between that and covenants and what spaces are there, and in particular management's plans should that headroom either be eliminated or be too narrow for comfort, and how does that then translate in terms of the disclosures that they're proposing for the annual report. Now, even though you won't be signing off your 2020 annual report if you're a calendar year until next February, March, there is still time to start thinking about all of this and getting management to run early with this. One thing we know for sure is that whatever assumptions and whatever scenarios are built around COVID, whether now or in the future, they will be subject to change. And there is a need to describe that this might just be best efforts at this stage, but as new facts and circumstances come to light, all this may require revision. As Tracy mentioned, the FRC has been facing a lot greater scrutiny, and that scrutiny is coming down to directors and how directors have operated. And they have reflected that in their auditing standards, telling the auditor to go look and see what the directors have done in terms of going concern and evaluate the director's work on going concern, including determining whether there are any aspects of going concern that the directors ought to have identified but haven't identified in their evaluation, and following that through. Similar to the FRC bringing out a new auditing standard on going concern last year, IASA, which is the picture you have to the right of your screen there, have also brought out an Irish ISA ongoing concern, reflecting those changes. So I think you will find as you go through the next audit season that you're finding the auditor asking an awful lot more searching questions about what the directors have done and the form of challenge that the directors have made of management in terms of satisfying themselves that all aspects of going concern have been identified. So it is well worth your while to take a look at that particular auditing standard just to see the instructions, if you like, that auditors are now given in terms of what the work they must do around going concern, because it is a step up from what you would have seen from now. And that will lead on, of course, in terms of the audit report and what the auditor is required to say. And you're going to see an awful lot more, especially in public interest entities, where the auditors will describe going concern and the work that's been done around it and the challenge that they have made of management and the results of that challenge. So moving on, we'll also look at COVID in terms of the broader accounting. And again, there are two documents from Deloitte, our need to knows, that came out and were updated over the summer that I'd like to draw to your attention. The first one you left is fairly short and therefore might appeal more to you and takes a kind of high level look at some of the aspects of accounting around COVID-19 that you might like to think about. And then the one on the right hand side is a much deeper dive into over 24 different areas of accounting that have various different impacts due to COVID. Now, I'm not going to go through all 24, you'll be delighted to hear up front, but I will just mention, of course, impairments, because that's particularly important. And again, as we heard earlier, all areas of management judgment and so forth are up for grabs. The auditing standards have ramped up in terms of requiring the auditor to be more sceptical and to understand better what the directors did to make sure that there was no management bias and that all the plausible scenarios that could arise have been looked at. And I suppose in terms of impairment, one trend that we are seeing is the difficulty in trying to determine impairments which would have happened anyway, and those impairments that are due to COVID, and that can be somewhat arbitrary and somewhat difficult in terms of thinking about, and then that's leading on, of course, into difficulties with the disclosures. But just as with going concern, you would expect the broad thrust of the cash flows and the approach to cash flows for going concern purposes to be reflected in how they're thought of in relation to impairment, bearing in mind that IAS 36 does have particular rules in terms of the value and use calculation. But just as you would expect as much information as possible to be grounded in what the market thinks and where the market believes things are going, you would expect that, notwithstanding all the uncertainties that we have at the moment, to be reflected in what's done for COVID. So you would expect, if you like, various different risk-based scenarios in terms of what COVID is doing. We've, as we know, got a national framework for living with COVID, which is 5 different levels to it. So does that suggest that there are at least 5 different scenarios that we need to look at? I don't know. I haven't seen how boards might react to those to that particular framework, but it's certainly looking like that. Looking at just a best point of estimate is no longer sufficient in terms of coming up with accounting. One other thing that has cropped up quite a bit and seems to be trending in a lot of boardrooms at the minute is actually the treasury function and what it's doing, because COVID and the related economic downturn has made interest rates go low and negative and stay low, and the expectation is that they will remain negative. And of course, if a treasurer with surplus funds can only make a loss by putting those surplus funds with a bank on deposit or whatever, they may well be tempted to see, is there a better home for the money? But as we all know, if you want a better return, you have to take more risk. So the question is, what is the risk that the treasurer is taking? And has the board, and has been flagged to the board, what is happening with those surplus funds? And has more risk been taken with those surplus funds than the board would actually like? And one other thing to keep front of mind is in terms of the accounting for these surplus funds. You might think, when they're surplus, we've got them in cash, they're the cash and cash equivalents. But if you look back to the last time we had a financial crisis, IFRIC in July of 2009 came out with a statement looking at money funds and explained the various variables that need to be looked at for a money fund to actually be cash and cash equivalent, and when it wasn't cash and cash equivalent, and therefore needed to be reported as some other form of short-term investment. And a lot of these money funds, because all you're going to get back is the fair value of the fund when you look to get your money back, you don't know the actual amount of capital on your initial investment that you're going to get back, because fair value will move. It may not meet the requirement of cash and cash equivalent, and therefore what will your balance sheet look like if amounts that you previously showed as cash now need to be shown as short-term investment. So there's quite a bit to think through and to probe in terms of COVID accounting. Moving on then, there's also the audit practicalities to think about. There's an awful lot more work to be done and has to be done virtually now than in the past. So you do need to think about how is management organising itself to make sure that the audit is as robust and that the information is getting to the auditors as quickly and as easily as practical. So we've seen use of various different e-rooms that are secure and confidential that can allow for information to pass through. We've seen use of various different trackers and CCTV in terms of allowing the existence of assets, be it inventory counts or fixed assets observations to take place. So all those kind of things all need probing by the audit committee to make sure that they're in place, as well as inquiring of management as to how have they actually achieved to maintain an internal system of internal control that's robust enough for financial reporting when there are so many people working from home, and therefore operating those controls from the home rather than in the normal work environment. And there's also the practicalities of if COVID-19 is rampant and we get more waves during January, February, and key members of management are not available due to illness or whatever, what are the backup plans to make sure that the audit can still proceed as smoothly as possible? So there's a lot of different challenges there that the board can make of management to make sure that the audit can proceed as smoothly as possible. Moving on then, I want to say a brief word about Brexit. Enterprise Ireland has reported that the movement of goods from 1st of January is going to require customs declarations. They have made an estimate that there will be over 2 million more customs declarations needed following the break at 1 January. And of course, the question is who's got the customs expertise? Are the various different haulier firms able to produce that paperwork? Because as you know, there are over 60 data points apparently on these customs declarations, and any data point that isn't accurate and complete at port means that those goods won't ship and causing blockages in the supply chain. So there are huge things to be thought about in relation to Brexit and how well prepared people are on the ground for 1 January and subsequently, as well as thinking from what the economists are telling us and what they think Brexit will do to various businesses and various business sectors, what that actually means in terms of how you should allow management to project forward numbers and whether that accelerates impairments or gives even further difficulty with headroom and confidence looking at going concern and so forth. Recent reports from the ERSI speak to sectoral differences between the sectors that are most impacted by COVID. We know, for example, hospitality and entertainment has been almost wiped out by COVID versus those sectors that may well be find themselves open to the chill winds of Brexit, but it will vary business by business. So moving on, just a very brief word with climate. The document on your right is an IFRS article which actually speaks to materiality, which you mentioned earlier, but also in relation to climate and climate expectations. And as Tracy said, come 1 January 2021, it's likely that the UK London Exchange will be looking for a comply and explain against the TCFD disclosures. Here we have the ISB reflecting on how climate actually impacts on the numbers and the legitimate expectation on investors that the numbers reflect any of these uncertainties regarding climate. And a very good point is made in this article that where you're not impacted by climate, and therefore the impact on your numbers is zero or immaterial, that of itself is a very material piece of information for investors to understand. And of course, as an audit committee, your job is to push back on that and say, well, show me how it is the case that we're not going to be impacted by climate, and what work have management done to build in the proper scanning of the horizons and forward-looking information to make sure that there is no impact from climate, so that no assets will be stranded, that as carbon taxes increase, as we know that they must, that there's no impact for the business or indeed for the consumer, who then needs to have money in their pockets for the business and so forth. Last week, on the 16th, the PRI, which is a group of investors managing over, I think, $103 trillion worth of investments, produced an open letter asking managements and auditors to ensure that not only the letter but the spirit of IFRS was applied in relation to looking at climate and climate numbers. So that would include the cash flow work that's done for going concern and also done for impairment, and in writing narratives in the back half as well as in the front half, so that the investor can understand the impact of climate on the numbers. So I think that is a huge thing for the audit committee to consider going forward. Moving on then. Just two minor items that I want to bring to your attention very quickly. I'm bringing this one to your attention simply because it's going to happen at the same time as you're trying to produce the annual report for 2020 for those who are calendar year reporters. This goes back many years. Came to fruition in 2018 when the EC Commission published a delegated regulation mandating that annual financial reports of PIEs, so public interest entities, be produced using an electronic thing called XBRL or inline XBRL or HTML, depending on who you look at or where you go to. But this particular regulation automatically became law in Ireland and says in relation to the 2020 year ends, the financial statements, the annual report, must be produced in HTML, I should say XHTML format. And of course, that publication has to happen to the same timetable as set out in the Transparency Directive, because this is the regulation made within that framework. It's automatically law in Ireland. The department don't have to do anything to make it law here. And it essentially means that the primary financial statements plus a limited number of notes have to be tagged up in this electronic format and made available. The thing is, this all has to happen in the same timetable. So therefore, the question for the audit committee is to ask management, have you got this all in hand? And do you have sufficiently robust internal controls around making sure that whatever needs to be made electronic has been tagged electronically in the appropriate manner? The CEAOB, which is an auditor's oversight body in Europe, has mandated the various steps and process the auditor must go through to report on that electronic tagging. So that all needs to be built into the next busy season. So in addition to COVID, in addition to looking at Brexit, in addition to thinking about climate, you also have to find somewhere in the timetable to put in this work as well. The final thing that I want to talk about on the next slide is in relation to an exposure draft that came out last December from the ISB on general presentation and disclosures. And they're changing the rules for the income statement, indeed the cash flow, and indeed the balance sheet. There's 250 pages. There's an awful lot in it. But on the next slide, I show you what I hope will be a legible version of the income statement. So we go to the next slide. On the left-hand side there, you see the template for the income statement. And what I think is what you're not seeing, rather than what you're seeing, is what should draw to your attention. So if you look at that income statement, you don't see anything about exceptional items. Yet in this time of COVID, when we're making acquisitions, when we've got disposals and so on and so forth, a lot of reporting is pulling out exceptionals. That will not be allowed. Also, you don't see any kind or presentation other than this year's numbers and last year's numbers. And that kind of presentation or the cutting of subtotals where management would like on the face of the income statement is to be ruled out. Now, this is an exposure draft. Originally, the comment period was to end June. Because COVID, the ISB extended to the end of this month. So there's only 9 days or so to get your stake in if you wish. But it'll take them at least 2.5 years, I suspect, before this is effective. Nonetheless, you can see that this is massively different for a lot of reporters over and above what investors have been used to getting from them. So I suspect this is something that the Audit Committee should make sure that management have some forward-looking scanning of the horizons for this and are matching up with the Investor Relations Department to make sure that a clear path through this can be found without spooking investors. On the right-hand side there, I've also given you a picture of our need to know document on this particular exposure draft, where you can get a summary of its main points. But as I say, running to 250 pages, it's quite a large document, but it's not something that should go by the wayside, because reporting your performance and not being allowed to use particular techniques that we have up until now is quite a big change for everybody. So that's all for me on looking on the accounting side of things.
That's great, Oliver. Thank you very much. I should have mentioned at the start, and I don't think I did, that we're happy to take any questions from any of our panelists. So if we just skip forward 2 slides there, if we may. What I thought would be useful just before we close and maybe go to some questions is, based on a number of Board and Audit Committee effectiveness reviews that I've been performing over the last number of months, particularly since COVID, I thought it worthwhile just setting out a number of bullet points for people. Some of this, maybe all of it is common knowledge, but I think in the way that we're all dealing and working with each other, very useful as a reminder in terms of meeting preparation, management, and kind of other activities around the Board and Audit Committees. Again, and it's happens every year, is really looking at the numbers of meetings that are being held and the format of those meetings to make sure that they're still relevant in the nature of the business to hand, and making sure, particularly as people are using WebEx or Zoom or any of the tools available to us, that there is more than enough time available for contribution from all members of the board or committees. We're certainly finding that with the work that we're doing with boards and committees at the moment, that they are taking longer. It is certainly more difficult to gain insights from all of the members without being very proactive and setting aside enough time for that to be done. So to that is the follow-on and making sure that the agendas are relevant and focused to what the priorities are, and as usual, to make sure that both the presenters, content, and in terms of the outcome of what's needed or what's expected from that content is appropriate. In terms of meeting management, I think we can all fall into just using Zoom. There is many other there is many other aspects where it may be necessary to use some of the online working tools that are associated with tools like this, that allow you to whiteboard, or the equivalent of whiteboard, or presentation and flowcharts to really bring the topics to life. I think there is a danger of us slipping into death by PowerPoint without using some of the interactive tools that are available to us. So as a board or as an audit committee or as committees continue to explore the best use of technologies and the new technologies that have sprung up very rapidly over the last number of months, or certainly have come into better use over the last number of months. One other thing in relation to meeting management that we're seeing really usefully deployed is actually setting time aside to debrief after every meeting. And that's not in relation to the topics of the meeting actually, but just how could we have done that meeting better? Is there lessons learned? I think we all know now that we're going to be in this situation for many, many months to follow. And every group is going to have a different dynamic. Every team is going to have a different dynamic. So therefore, working with each other to make sure this team, your board, your committee, is working and sharing effectively as possible. Then just in terms of other activities, it is making sure that the coordination with the board and the other committees continues to work well, be that in terms of information flow or in relation to timing and the time between meetings. I know certainly we've worked with some boards that used to deliberately, when we were when the boards were getting together physically, actually put the board and the committees side by side in terms of one set on one day and then the board on the other, which had its advantage in terms of travel arrangements, but did sometimes have a disadvantage in terms of time to think from committee to board. And certainly, while people are dialing in now, there is an opportunity maybe to split that. I am conscious that many non-executives, independent non-executives, don't want their boards spread over the month on a daily basis. There is some advantages to having it together. In terms of then onboarding, and this is for actually employees as well as board members, just much more difficult in a virtual world to onboard people so that they understand the real cut and thrust of the organization and understanding the culture and how things work within the organization. And while it works within our businesses, it's also very clear in relation to board. And I think board dinners and those informal get-togethers are sorely missed in terms of that building a team dynamic and that understanding what makes other members tick and how to best get the maximum value from the time together. And again, I think it is also worthwhile just assessing every period. So after every meeting, definitely have those views in relation to lessons learned. But every kind of couple of months, just sit back and focus as to whether the board or committee is going well and address any findings formally that may be coming up. So with that, I will call the kind of the presentation aspect to a halt. We have a couple of moments for some questions. And actually, I have one question, Tracy, that if I may pick on you first, as one that's come in. In the UK, the UK's new requirements in relation to 172, has that really made much of a difference in relation to behaviours as you're seeing it?
Yeah, thank you. That's a good question. I think it's fair to say that all companies would have said that they had extensive stakeholder engagement activities going on before, this new reporting requirement came in. I think the difference that has happened, the change in behaviour, is that there now has to be this, because of the reporting requirement, they really do have to be able to show how that engagement activity got into the boardroom. And so I think that's the kind of interesting new link that it's really making, it's put 172 back on very clearly on the board agenda. It's not new, but obviously the focus on it is new in terms of the reporting. So that has made boards want to be much more aware of the output of stakeholder engagement and also just their ability to demonstrate that they're thinking about things like the long term and maintaining high standards of business conduct. So yeah, I think it has had an impact, and hopefully those companies that did it in a meaningful way found they had the strong mechanisms in place to deal with COVID a bit more effectively.
Excellent, thank you. Oliver, just for maybe it feels like a bit of a sales push, but a question from myself. Where is it again that you're recommending people to go when we send out the presentation in relation to finding most information if they want to get in down and dirty with those reports?
Yeah, Con, yeah, you're right. It does sound a bit like an ad. And on previous webcasts, as you know, you have accused me of that because I have mentioned IS Plus more than once in previous webcasts. But that is where you would go, especially in terms of getting the most up-to-date information. So, for example, I mentioned the PRI letter in the last week. You'll find that we've been using on that on our IS Plus website, and you can drill down into further information there. So that's the best place to go.
Excellent, Oliver, thanks very much. I don't think you mentioned it during your presentation, but you were able to say it twice in the 30 seconds past the question, so well done. So on behalf of myself and the other participants, our presenters, just thank you very much for joining us. I hope you found it useful. We'll see you in the next couple of weeks. We'll send out a hold the date invite for that. If you have any questions, you can see our contact details now on screen, and that will be included within the pack. So stay safe, everybody, and thank you very much for joining us on behalf of myself and the panelists and my partners. Goodbye.